All right, welcome everyone. This is Otsu, and this is Observations with Otsu. Apologize for my voice. I think I'm kind of losing my voice a little bit. But anyway, you guys know the drill by now. Basically, we go over Bitcoin and Ethereum on the weekly basis, go down to 3 day, 1 day. Depends how I feel. Usually, we always cover the 1 day, cover 3 day in addition to that, and then we cover the 4 hour, and then whatever else contextually makes sense. So we come from that from a top-down perspective, and then I look at key observations. That's the whole point of this video, is to make big observations that I see that could be helpful to you. And then I usually try to come up with one long position for you and one short position for you. And so that kind of covers both the bulls and the bears. So that's kind of how it goes down. And I got a few preliminary things. Shouldn't take more than a couple minutes, but then we'll get started. All right, so we got two things to cover. One, I'm going to be covering some of my a new Discord that I just launched, and then I'm going to cover a little bit of news. I don't really cover news. I don't really like covering news, and it's not even news per se. It's just kind of some drama. So, but first things first, I have a new Discord. It's called Knowhere HQ, and now if you are familiar with my other stuff, I actually have another Discord as well. So I've got two now, but this one is a brand new Discord. This one's open for everyone, and this is going to be a way that I can. I made this for two reasons. One, I have a lot of questions about things, about the A-Rune, about a lot of stuff that I do. And I get, even though I have a lower follower count compared to a lot of other people, I have a lot of engagement and a lot of DMs, a lot of questions. And so this gives me a chance to be more into a community-based relationship with my followers. It allows them to contact me personally if they need to, things like that. So what that incorporates is chart requests, and it's a big thing. A lot of people ask me for charts, and quite frankly, I just don't have time to do custom chart requests. So this allows me to silo that, right? To see everybody can just dump their chart requests in there, and then I can cover them, on 1 or 2 days a week, and that kind of covers that. Another thing is, I do have a lot of content to share, and that's a way to teach you guys. So if you are a beginner and you just want like some basic exposure, it's a way to do that, and that's free. So it's not really much of a trade-off. I'm not even asking for a ref link for any of that stuff, okay? So that's part of it. In addition to that, I got trade ideas that I will share. Generally speaking, I'll share some of my bot stuff as well. And I sprinkled some in over the weekend. That seems to be working out well. Things like that. In addition to that, there's also going to be a paid option. I know that's kind of a gray area for some people. For me, it's not, because if you want just basic learning experience, I have that free stuff available. I'm always talking about stuff on Twitter. I got my free Telegram. I've got this Discord now. So I've got a Medium blog as well. So I've got a lot of free content. This is going to be a very small paid thing. Maybe I haven't decided quite. Somewhere between $25 to $40. I'm not really sure. But it's going to cover a lot more things, more detailed charts, more aggressive takes, much more content in that regard. It's also going to have a trading challenge. I'm also going to have I'm also going to have a trading portfolio where I make trades, and so you can see the trades, how they work, and how my portfolio will go up or down depending on what I do. So it's much more interactive. You're going to get more videos that way too. So that's the thing. So the free version is going to be kind of a light version, and then if you want more content, you can subscribe to the paid option. So if you don't want to do that, if you don't think that that's good for you, or you don't even think that's not something you want, you still have the free option, right? So there's really no much difference between the free and the paid option, except for the paid you get much more content. So it's more for people that are much more interested to trade and have the ability to trade and want to learn faster. So I feel like that's a pretty good compromise between the two. So anyway, that's Knowhere Discord. I'm going to leave the link in the description. So right now, everybody is a free member. All the paid stuff is going to be free for the first month. I'm doing that for everyone. And so then I will change that probably at the end of July. And so we'll do that. And so that's the first thing. It's actually really the only feature, the only thing that I had to say about that. The other thing is more something I've seen on Twitter, and so now we'll kind of navigate into that. And so the last thing I want to talk about before I kind of get into the charts itself is talking about NFTs. I mentioned this on the Twitter post that I would talk about NFTs, and basically the only really thing saw, it seems that there's a collective like negative vibe coming from the NFT community now, and it's very interesting to me because I'm not really an NFT person. Like I tried to get into it. It's just not for me. Like I like making NFTs. I like the whole process. I can't quite get into the NFT community vibe. That's just I don't know. I feel like there's too much identity attachment that needs to happen to enjoy that, and I can't do it to that capacity. So and if you do it, it's fine. I'm not blaming. That's just a basic comment, right? That's not, I'm not saying any of that to be rude or nothing like that. So, but what I have seen is that there seems to be an extra toxicity, and it almost seems like if I didn't know any better, it's almost like a bottom like type vibe, right? Like everybody's complaining, people are capitulating. It sounds like a bottom signal, and I don't want to say that it is necessarily, but it struck me as odd, and I wanted to kind of cover that just in a few minutes here because it's something that I just noticed really big, like the Bored Apes and all these other like people are going just nuts over this now. They're complaining hard about, it's not what NFT was promised. It almost looks like everything's falling apart, and that's exactly what happens around the bottom scenarios with crypto narratives, right? So I just thought that was interesting. I didn't really want to comment too much on that, but it struck me as very interesting to see that. So I might monitor some NFTs to see how that works, and see if maybe my intuition is right. I don't really care either way, but if you're interested in NFTs, I think that's something to note, like to look at the toxicity of it. And I guess that's what I want to say for you guys to help you guys, because I don't really care about NFTs, but if you guys are into NFTs, I think that's worth checking out. Like look at the vibe, look at what's going on in the space, and don't look at all the negative stuff as necessarily like the sky is falling. Maybe try to look past that and see, like, is there something here that's worth looking into? So for example, like Bored Apes and other NFT collections, maybe, I know this sounds counterintuitive, but look at NFT charts. And I'm not talking about coins like Ape or Blur. I'm talking about the actual NFT charts on, like, I think it's Crypto Watch, and I think there's other ones that have it, where maybe there's a divergence that you see, and I've looked at that. Like maybe that's something that's worth looking into, because I have a hard time thinking that NFTs will just die, and they could. I think they're more likely to die than crypto would be, because NFTs are crypto. Like it doesn't make sense for one to fall without the other. But I think I feel, I have this intuition that it is worth paying attention to NFTs right now. So anyway, that's all I wanted to say about that. You do your own research. I can do an NFT video if you want. If you want me to, just mention that in the comment, and I can do that. Other than that, let's go ahead and get to the charts now. All right, so let's first take a look at Bitcoin. As you know, we don't do Bitcoin dominance. We don't do total market cap anymore. Didn't really plan out with the productivity of these videos. So I'm going to start the weekly at Bitcoin first. And this is something I mentioned a couple weeks ago. So we had this big week, a big pump. And there's a few different things on here that I want to take note. And I've mentioned in the last 1 to 2 videos was that we do kind of have a divergence in play. I've already got some people talking to me about this. And it's something that I mentioned for 1, but 2, not quite a big deal yet. This is very minuscule because it's so close right here, and it just depends on the exchange, right? And so I'm not quite interested in it just yet. It's not quite productive for me. And so when you have a divergence like this that's like really too close to call, it's complicated because mathematically it is a divergence, and I've told you guys before that mathematic-based divergences matter more than aesthetic-based divergences. So if it doesn't matter if it looks divergent, it's a matter of, does the math show up as a divergence? And so the thing is here, if we look at this candle right here, because this is the top bullish candle, the RSI is at 69.62. And so if we look at it here, it's 62.68. So it's significantly lower versus, so the RSI is much lower in its strength. It's still in the 60% range, but the price itself is very different. So even though that the price is, or the price is the same rather, so even though the price is the same, the strength is not really relative to the price anymore. So yes, we will see something. We will, and I'm keeping that in the back seat. But the reason I'm going to say that it's not quite as divergent is because the math here is so close, and depending on the exchange, we actually closed under. So that's the thing. How you can have a good compromise of the two is that we can treat this as a deviation instead. And so you get the best of both worlds. So until this goes underneath and closes under here, this is still a valid long for me. So this is a very complex, very unique scenario actually, because I teach things like divergences, but I also teach things like Darvis boxes, and this would have caused me to long. The problem is I already was long down here, so I'm not going to add on to my longs on a high time frame perspective. So, and the indicators this was a wedge. We bounced off the 50. That's a much more accurate approach, right? So that's something to keep in mind. Another thing is too, we could look at other patterns. So like the 2 week, this is completely fine on the 2 week. Again, we bounced off the 50. So I'm not quite concerned just yet. I'm really not, because it's so small. And you know, and I hesitate because I don't want you to think that, well, I'm just bullish, so I'm going to ignore it. And it's not really that. It's more of a lines of, I'm okay being wrong on this by waiting for a deviation instead, and deviations will give me a much more clear chance. And deviations also, you know, and I mentioned the 3 weeks at one time, is I've had this on long or logarithmic. So this was a bearish divergence, right? But the key was the deviation as well. So here's your divergence. We actually went up for 3 more weeks past the divergence, right? And so we still had 3 more weeks at play. And now this would have been correct if you would have started selling here per se. Like if you would have sold your spot, you would have been long-term correct, right? But if you would have margin short, you probably would have got stopped out. So the big compromise here is the deviation. The deviation confirmed the divergence. And so that's kind of what I'm saying, is a deviation will confirm that divergence without having to guess about the divergence, right? And so I believe we actually might have this here as well. Let me check here. We have, oh no, this price was high. Okay, this price is higher, 53 versus 54. Okay, so this is not divergent. If it was, I actually was going to start reconsidering a little bit, but you see what I mean, right? So the deviation confirms that our divergence is real. And so basically the way that I interpret this a lot of times is, if I'm long and I see a bearish divergence, I don't short. I just take profits on positions. And that could be 100%, that could be 10%. It really just depends on you. And so that's kind of a key observation that I see from the get-go, is this divergence on the 1 week could be assigned to just take profits instead of trying to sell. And that's going to be a big problem, I think, because a lot of people want to be bearish here, and they're trying to find reasons to be bearish, and they're not really getting what they want. So that's another thing that I brought up from the last video, is that don't be too concerned if we just range for a bit, because historically we've had these big candles like so, and we'd have, look, this was 3 weeks of nothing. You know, this did okay, but then we had like almost a month of just sideways. And even though that's not sideways to me, a lot of people do interpret that sideways. I personally don't, but I'm interpreting it the way that people normally do, because most traders will view this as, oh, this is so boring, it's the same price, blah, blah, blah. But that's where you need to set yourself up for success. Like, okay, you see price ranging, what does that tell you? What kind of positions do you need to prepare for, or how to react? And that's a key observation as well, right? So, but a lot of these big candles, we have down moves or you know, sideways price action, and mentioned last week that don't be too upset if we range for like a month, because it happens quite a bit, right? And so far, we have a good week so far today. It's only been half a day roughly, so. But the thing I want to mention here is last week, this was a bullish week. Everybody was scared. Everybody was scared. I was bullish about this. At the worst, I said it would be sideways, and it was basically sideways. It was almost kind of both in a sense. So that's why I tell you guys, just don't freak out. Don't freak out. You're gonna lose more money by freaking out than if you would just riding the wave. Like, I have Bitcoin. Like, I have most of my money right now is in Bitcoin, and I'm okay with it going up and down. Part of it is, yes, I did get down so low, but another part of it is I understand, like, things fluctuate. Things will go up and things will go down. Price will not just go straight up or straight down as much as you think it will. Like, it will in the long term like this. And so that's why you need to be prepared for that. So, for example, like my color band strategy that I use, like, I buy when it's blue and I sell when it's not blue. It's as simple as that. And so when you have stuff like this, like, I just ride that wave, and you're like, oh my gosh, a lot of people are like, oh, I could never do that. Well, what's stopping you? That I bought once in June 2020, and I sold May of 2021. It's one trade. You buy half of your portfolio. That's what I buy a significant amount of my portfolio. You can't be obsessed with this. See what I'm saying? Because, like, people will buy here. You'll buy here and you'll be underwater for a month. Like, oh my gosh, I'm freaking out. I'm gonna lose everything. I can't believe it. I'm gonna lose it. And then you don't. It goes up, because that's how trends work. Trends work as trends, and you got to understand precisely what trends mean in order to be comfortable with that. If you don't understand that, then you kind of need to, if you want to do this the way that I do it, because you're not gonna just see a 50% nuke off of a trend, because then the trend's no longer valid. See what I'm saying? So, like, that doesn't classify as a trend, so I just want to keep that in mind. I'm not saying, like, you have to have risk management, of course. That's what I'm saying, as well. But you don't have to be so paranoid about lower price action, because that is where you lose money. The people that lose the money the most are in areas where they make a reaction because they're afraid to lose money. They lose money off of a self-prophecy of being too scared to lose money. Does that make sense? So you kind of gotta watch out for that, right? It's like driving. Like, I thought of this the other day because I was really tired while I was driving, and I had to be somewhere. I mean, I wasn't super tired, like, I wasn't sleepy or nothing, but just, I got some coffee and all that, so it's fine. But it's like, you get paranoid about everything. What, this car's gonna stop, or this car might hit me, or whatever. Like, you get consumed by that, and then you actually start driving worse than what you would if you just kind of went about your business. And so that's the thing. Like, there's a lot of, I'm a big complainer. Unfortunately, I don't want to complain, but I'm a big, like, I have a lot of commentary, so to speak, about how bad drivers are, and I've learned over time that I just need to ignore that, because it makes me a worse driver, right? It's much better to just focus where you're going. Where I live at, if you do not, as long as you do not basically initiate an accident, you can't really be at fault for an accident. So it's just like, you kind of just do your own thing, right? So it's more complicated than that. I don't want to leave that hanging, but I guess I have to. But as far as this goes, this is the time where you should be trading a trend, in my opinion. So anyway, that's the weekly. We're doing good so far. I like this reaction. I don't know if this is gonna, like, this kind of goes against my wick theory. Now, wicks tend to happen less often on both sides on the weekly, like these two, for example. So I wanted to keep in mind. I like how this is going. I like it a lot. I actually want to cover some alts, but I won't be able to do it today. But I will do it in my Knowhere video. So if you sign up for my Discord, I got a free Knowhere video discussing that. If I kept talking about everything all day, I'd be recording for 10 hours. So that's the weekly. It looks pretty good. very bullish here. On the daily, we kind of see this in action. I kind of zoom out to kind of give you a perspective, like people are freaking out because this was kind of deviated. And this was a little bit tricky, and I mentioned this because technically it did deviate with this, but it didn't because of the way that we should be interpreting this. So I don't really look at deviations until we completely close above it and then close below. We did not close this high. We wicked, and we're currently at this right now. We're pretty much close to our all-time high for 2023, and so that's pretty good. I like the way this is going. This is much more of a reaccumulation pattern that I discussed, and I've been discussing honestly for really since here. I originally thought that this would be part of a reaccumulation, or no, actually I thought this whole thing was. Turns out it's just this for now. This looks so amazing to me. It really does. We're getting ready to hit a new high. I tend to cater to my wick-based theory, but this is a good chance where we may not. It doesn't always have to work that way. But this looks good. We have a small bearish divergence here, but so that could be, we could go up and then come back down. I don't really want to see that. I'd rather us go down now, but this looks very solid. I like this, and another observation that I have is, I mentioned last week, look at the observations about how price behaves at these levels. If it rejects aggressively, that's bearish. If it consolidates casually like it has been, that's bullish. And so that's the thing. A lot of people want to just, short at quote unquote resistance, but resistance is not resistance necessarily if it behaves like this. See what I'm saying? You got to look at how price behaves at support and resistance as well. You can't just be like, long at support, short at resistance. You kind of got to see the follow through as well. So that's the daily on that. Here's the 4 hour. It looks great. I can tell you, for the most part, when you have a structure like this, again, very reaccumulative, it tends to expand pretty bullishly. So I like this a lot. As we go back to the daily, we got a A-rune bearish wedge pattern, looking to look for a bearish cross. If this crosses bullish, this will become invalidated, and so we might see that. Very interesting. But if this crosses bearish, which means we would have to fail to make this high, then I think we're going to have a bullish consolidation instead. And so that's what I would look for instead. That's kind of why I want a rejection. I actually want a bearish rejection here, because that would last for about 2 days, and then we will skyrocket for the next month, I would say. And so that's why I'm looking at subtrends. I want the subtrend to stay bearish for now, so we can have a better bullish main trend. So we'll see. I think this is very interesting, actually. But this looks very, very solid. I'm not adding just yet, but we'll get into that. 4 hour looks pretty good. So what can I say about long? So I mentioned the key observations with Bitcoin. What can I say about longs or shorts? So the easiest long would probably be up here, and I would probably wait until we close above this wick and do something like so. Something right around here. Maybe 31.5, something like that. And my stop position would either be, if I want to be very conservative, I'd probably put it this low at this wick. If I want to be more aggressive, I could challenge it right here, or somewhere in the middle between the two would be good. So that would be suitable. I like this better because this would give me a much better chance to stay as a valid position. And then I would probably just target 40, to be honest. We have a lot. It's more complicated than that. I would target 40. Me personally, when I trade on the daily Bitcoin, I trade with much higher risk as well. So that's another thing. But if we blow past this, you got to understand, here's your midpoint, and so we're above that already. So that shouldn't be a problem. The other one is going to be, if you consolidate all of it, it'll be right here, and guess where that lands? Right where my position was. So I think that we're not going to have too much of a fight until we get to the $40,000 range. And so this is my long position that I would that I don't recommend any positions at all. But if I was longing this, this is where I would do it. I would wait and long. And so if you wanted to short this, you could do one or two things. If you want to be very conservative about it, I'm going to keep that position up here actually. But if you wanted to short this, which I don't think is a good idea. I think longs are overwhelmingly the right idea because of this weekly. If this is bullish, which it is because of the blue, I don't see a reason to short. The shorting should have been done here, right? So when this is bullish, I favor longs. When it's bearish, I favor shorts. But let's go ahead and go back to the daily and see this position here. If I wanted to be a little more conservative about this, I would wait until this same long signal and then it went back down. So if it closes above here and then it comes back down, and then I would short like right here. And then I would put this probably at the high or a little bit above it. And then I would target down below. And it would just depend. I don't know where this target would be. This looks right based off of the other things. But the problem is, actually this looks even better from this small engulfing. The problem is this is only a 2R. And so you'd have to double your risk or whatever to kind of make that worth it. So that's what I would look at. I still think the strength is in longs right now. I think this is a very strong price action. I don't think anybody should be thinking about shorts, and honestly, I think the shorts are fueling a potential long squeeze. I think it's actually going to do more damage than good. So this is what I like. Anyway, so that's basically a top-down version of Bitcoin, my key observations, and some scenarios for long and shorts. And so I'll take a short break. My throat's getting kind of scratchy. Then I'll cover Ethereum. All right, so let's go to Ethereum. Both things are up for 1.5% for the day. We'll cover this here in a second. We're gonna go to the weekly first. Actually, I think I'll cover this very briefly so I can kind of get rid of this, kind of get my OCD or whatever it's called just out of the way. So this is something we covered last week. We had this big continuation pattern. Had the consolidation, it did reject, and then it went bullish. This first candle right here was the time. Let me just get rid of this. I don't think I need that. This was the time to get long, and so far that's the case. So this is a very easy pattern to see in the wild. You got this continuation triangle, consolidation, like I said, and it worked really well. I think this is the best way to interpret this, because if you do get rid of it, this is a very complex structure. This part here didn't make much sense as far as support. Like there's too much going on here, too much going on here, too many wicks as well. And I think the wicks have a lot to do with a lot more of the trading and, maybe deposits and withdrawals, things like that. And then you got the DeFi stuff going on. So that's part of it. But the trends itself seem to work out well. You get the RSI 50 bounce. That was probably your key, in addition to my script, my color band script, where it bounced off of the lower part of that band where this line is. So that's usually a good sign to get back in, continue, things like that. Let's go ahead and get rid of that, and then we'll kind of do the top up or top down analysis. I guess it is top up right now. But this looks really good again. We had that big candle that I talked to you about, but we had a bigger reaction last week than Bitcoin did. And that's another thing that I mentioned on one of my tweets, is I think that you're going to see a switch of dominance to Ethereum versus Bitcoin. And so far I think we're seeing that. We can kind of look a little bit, I guess it's kind of a brief detour to look at the dominance, and we had a smaller candle here. I'm not necessarily saying we're going to go down or go up with this. I'm kind of waiting for this red line, because historically this was a big deal. We've never crossed this line and held it literally since February of 17, so pretty much 6 years or so. And so that's something I'm looking for. I'm looking for to see if we can do that or not. And so that's something I'm interested in. I'm wondering, my key observation with this is to see, will we get a rejection, and if we do, will we see an alt run? Because we saw an alt run here, and so I'm kind of expecting the same thing. But if we go back to Ethereum, And we go on the weekly here. This looks pretty good. We had a strong reaction. We have an even stronger reaction versus Bitcoin last week. We still have another stronger reaction today at the beginning of this week. So this looks pretty good. Usually when you get these kind of situations, you should treat it. Unfortunately, this is a deviation. Well, not unfortunately, but just what I see. This is a deviation because it held and then it went back below. But this is also a deviation too. And so like so. And so now, typically deviations you want to have in pairs of two like this. It doesn't really matter, but this is cleaner. And so we've had two different deviations with this. So this makes it a little more complicated, right? And so usually you see a run up with these kind of things. But the best way to kind of view it is to view it like this, which would be a deviation, or just doing it completely like this and just waiting for the reaction. And so this would be my total key observation for Ethereum in general is I would play the break of this. Now I have a hard time believing that we're going to go back down to 1626, at least for right now. We'll see about that. But I think right now the odds definitely look more favorable to do 2130 and higher. We also have this resistance point, so this is a little more complicated. We have this here. We have this structure to go through, so this mid at basically 2300, and then we have a resistance here. So we got a little more of a struggle for Ethereum, and so we'll see how that goes. But overall, this looks pretty good. I still think that Bitcoin looks better. It's stronger, but I think Ethereum is going to have a bigger follow through later on. So basically I'm saying right now, Bitcoin is my play right now. I like Ethereum. I'm actually in both, but I'm going to stay in Bitcoin for the moment. And so I think once Bitcoin weakens, you can get into Ethereum. Altcoins are looking pretty good as well. So we might get that alt season. I don't know. I'm concerned though that we're getting a pump now with altcoins now versus later, because it should be later. But we'll see. Again, I'll cover that. I'll try to cover that in the Knowhere video. So that is weekly on Ethereum. Let's go back to the daily. We've got that big run up again, but not too much to say. We had that trend move down, like so. We had the consolidation bounce, and now we have the run up, the markup, so to speak. And so right now we have this to look forward to. We got to break this, and then we got this one up here. So we got a few different things that we got to do with this, but this is where we can take this level by level, right? So this is where, like, what would I do in this situation? Well, if I wanted to long this right now, I would wait until we got to this level again. I would wait till we reclaim this, and then I would use this low or this current price even as a way to use it as a stop. So if I want to do conservative, I use almost always when I have a conservative stop loss, I look at the lows. If I want something more aggressive, I'll take it a little bit closer, because generally speaking, if you get this, you should not go back down. When you go level to level, you know, it's like going up a building, right? If you're going to the 5th floor and you're at the 4th floor, why would you go back down to the 3rd floor to go back up? It doesn't really make sense. So the idea is work at it level to level. So once you get to this level, your stop loss can be at a lower level, and then you can target maybe like 35. You know, I think people want to target, 2,000, but we're pretty much there, so you can't really do that. I think 23 would probably be where I go, and so that gives you about 3.5. So that's pretty good. I think that's pretty good. I don't know if I would wait to go up higher, although you can do it. Another option could be doing that by longing here and having your stop loss below here. And if you did that, I would have a higher target as well, but you don't have to. But if you only do 23, you're not going to get anything, right? So, I mean, you could see, was it maybe like here at the mid, like 26? So that only gives you a 2.3, a little less. But you could double your risk if you wanted to. And this should be much less likely to stop out as well. Typically, wider stops don't stop out as much anyway. So, but I don't prefer this one, so that's why I'm going to get rid of it, but I do like it. And so another option would be Actually, I'll just keep it up. You could do the short option, and if you did, I would wait for this to come up and reject, so you could almost target the same thing. This is very similar to Bitcoin, actually. And so you could be conservative and target above this, and then target low. So you got 240. It's a little bit bigger, a little bit bigger of a short opportunity than Bitcoin was. Or you could target something like so. Or you could wait until it comes back down, target maybe somewhere around here, a little bit above that high. And now you got a much more aggressive stop of a 4R, so that looks pretty good. So I think if you wanted to short, I think Ethereum has a better opportunity to give you that. But I still think longs are the better opportunity for now. Look for the rejections first and go from there. But overall, I think this looks pretty healthy. I don't know if we covered 4 hour or not. I don't think we did. But I mean, this is pretty janky, to be honest with you, and that's kind of why I said focus on the trends, because I think that'll help you better. It's an easy way, you know, and this was the trend that I had showed beforehand, roughly something like this. So that's what I see. So anyway, I hope that helps you. That's pretty much the end of the video. I hope you enjoyed it. Please like, subscribe if you did like it. And I'll see you in the next video. Thanks.